Good morning, everyone. Thomas Montgomery. It's my pleasure to get together with you this morning. We visit with our distribution partners pretty much every weekday at this time, 8 o'clock Central, to talk about strategies, tips, techniques, share success stories. We had a really good discussion, I thought, yesterday where we talked about credibility and legitimacy. So if you missed yesterday's training, I encourage you to go back and view it. All of our past trainings are available on YouTube. We record the Zoom, we upload to our YouTube channel, which is Business Paralegal, and you can go back and view past trainings. Yesterday's was especially a good one, I think, to help overcome objections in terms of, well, is this really credible? Which of course it is. Today, we're going to talk about financials, and we've had a recent discussion somewhat similar to this. But as I've talked to some of you and some of your clients, I think this might be a valuable lesson, even if it is a refresher for you. So our discussion today is on financials for a loan package. As we typically do, we're going to start by setting the foundation of who we are and what we do, and then we'll get to step 3, which will be the topic itself. So let's go ahead and make sure that we're all clear on what we do, what you and I do together as technical advisors. What we do is we help individuals and small business owners improve their credibility to qualify for financing, regardless if it's business loans, auto financing, mortgages, or what have you. We use the credit and funding program. Through the grant sponsored program, we can guarantee anyone a minimum of $100,000. We do that by improving their 3 C's: credit, collateral, and capacity. Programs proven, legal, and effective. So I think we're probably all clear on what it is that we do. And I thought one of the most, as I listened to the recording from yesterday's training, even just this morning, I think one of the best nuggets that came from it is how we are really financial literacy educators. And the most important message that we can convey to those that are looking for capital is to reframe what their goal is. Many people say, I want money, I want money, I want money, I want money to start a business, I want money to grow a business, I want money to save a business, I want money. But really, it should be, I want to be credible enough to get the money to grow, to start, to save a business. It's that credibility that is missing that's keeping most people from getting access to capital. And that's what you and I do, is we help them become credible by improving their 3 C's. And we have a proprietary, innovative way of doing that. And we do that at no cost to the client. Okay, so moving on to step 2, we need to understand our target audience. Now, we work with some really strong candidates. We have a client that signed up yesterday. He is smart. He's a flight nurse. He's also a realtor. I mean, he's qualifying for a large amount of funding very quickly. So I'd have a hard time labeling him or his file as imperfect. But many of the people that we work with have some credibility problems. And when I say that is not a personal attack. That's not a statement of superiority. It's just saying that there's something wrong with their file that's keeping them from getting approved or getting approved for as much as they want. And that typically falls under one of the 3 C's, or they're lacking the overall loan package, which we'll be talking about in a moment. So we love working with imperfect people. We want to help people that have money problems, people who have credit problems, people that have collateral shortfalls. And that's what we do. You and I, as technical advisors, help them become credible enough to get funding. Minimum of 100. Certainly can be more than 100,000, but a minimum of 100. All right, so that's the baseline foundational discussion that we tend to start our meetings with, just to make sure we're all clear of what we do and who we want to help. Now let's get into our topic today, which is the discussion on financials. And I think this is really important. You can let me know via the chat function, the Q&A function of Zoom, any questions, thoughts, or concerns you have. So let me go ahead and advance it up so we can see the whole thing. And I'll make it just a bit smaller so we can see it all. All right, so understanding financials for a loan package. But as I often do, I used to be a high school teacher, and then I was a college professor. I love the question why. And I think that's the most intelligent question that anyone can ask. Well, why? Why do we care about a loan package? Why does that matter? Well, the loan package is the assortment of documents that need to be submitted to the lender or extender of credit for underwriting to get an approval to get funding. So it's the documentation that's needed. When you go out and apply just for a personal loan, often the amount of loan documentation that's needed is minimal or nil. But when we go try to get business funding, especially larger amounts, the loan package is key, right? So maybe that's another element of financial literacy that you and I have to address, because I don't think there's many entrepreneurs sitting around right now saying, damn it, I wish I had a really good loan package, right? It's not coming to their mind. What are they thinking about? I just want funding. Well, what does it take to get funding? Well, for business funding, we need a loan package, and we also need to be credible enough. Right. So that's what we do with the credit and funding program. We help them become credible enough, but we also help them build a loan package. Part of the important part of the loan package is putting together historical and projected financials to qualify for funding. So now we're hitting the nail on the head of our discussion today. And I want us to be clear on the difference between historical financials and forward projections. So we're going to talk about what these are, how we help, how we overcome problems and issues. So let's dig in. One of the important financials, which we put under the category of historical, because what I mean by that is it's based upon facts, not projections, not the future. It's where are we now, or where have we been? And so a personal financial statement is one of the first documents that we help each client create. It's actually part of the credit and funding program onboarding. We provide each participant in the credit and funding program, once they enroll, even though they may not have paid the setup fee, we already jump in and start helping them implement. And we help them put together their PFS, their personal financial statement. So let's jump right into the one of the first objections that you may face. You may hear a client say, well, this isn't going to work for me. I don't have anything. Well, we're not evaluating or deciding if you should participate or not based upon what's on your PFS, but we absolutely need to create a PFS to see where we're at, determine what needs to be done, and get prepared for funding. So this isn't one of those things where we dismiss it if we think that it doesn't look very strong. We don't dismiss it, and that's why we start out with it. The personal financial statement shows what we own, what we owe, and correspondingly our net worth. That's the bottom line. Why do we care about this? Because we're building a loan package to get a large amount of business funding. And you might say, well, whoa, if we're trying to get business funding, why the hell are you asking me about my personal information? Well, because banks and lenders infer that the owners of the business, in terms of how credible the business owner or owners are, is reflective of how the business will handle its financial affairs. Now, you can debate that all day long. I don't really care, because it doesn't matter what you think. And frankly, it doesn't matter what I think. It matters what the lender thinks. And we know what the lenders think, and they want a PFS in most cases. So that's why we start with it. We don't worry about a client coming back, and let's say that we find out that they do not have strong net worth. Is that does that exclude them from the program? Absolutely not. Because remember, in the credit and funding program, for free, we transfer assets to help them become more credible, to improve their liquidity, and improve their cash flow. So we're not worried about a bad net worth. We're not worried about a weak PFS, but we do need to get an accurate understanding, a baseline of where they're at. So this is an example of a historical financial. So you might say, well, I think things are going to really turn around this year. Well, that's fine, but this is a reflection as of a given date. What is our net worth? What money is, what assets do we own, debts that we owe, net worth as of a given date. So that's the first example of historical financials that we help clients with a loan package. And we address this from day one, from usually within the same day that a client enrolls in the credit and funding program. Even if they've not paid the refundable setup fee, we're often helping them create their PFS. Now, let's switch over to the business discussion, still under historical financials. So this is personal, right? PFS. Now we're on the business financial reports. Where do business, well, let's rewind. So where does this come from? We send them an onboarding, and it has the form and it has the instructions. So that's the where. And then, of course, this is what it shows. Okay, now we're over to the business financial reports. Where does it come from? This is going to be an uncomfortable part of the discussion, but let's go ahead and go through it. A business should be ran like a business, not like a hobby. What is included in that? What does that mean? Well, it means that we track our money properly, that we track our revenue and expenses and the business's assets and liabilities. And so, in my opinion, and you can disagree, and you're maybe right, but the best way to do that is to use off-the-shelf software that's very, very affordable, that smart computer programmers and accountants have put together to make it simple for people like you and I that are not experts in all that. So an example is QuickBooks. Now, QuickBooks has competitors, FreshBooks, Peachtree, and others. We don't care. We don't sell accounting software. But a business should absolutely, and I don't think you'll find anyone that's knowledgeable in the industry that would refute this, a business should absolutely be using some sort of accounting software to manage their money. Probably the only exception to that is if you just outsource it. You have a bookkeeping service or an accountant that does everything for you, then we'll give you a pass. But no, we're not going to say, well, it's a new business, I don't need that. Bullshit. If you're a new business and you're trying to get funding, we need to get a freaking good loan package. And we can't act like, woe is me, I'm a new business, so I shouldn't be asked to track my money or my assets. Think about it. The lender is evaluating if the borrower is capable and credible of handling a large loan. And if they can't even manage the current money they have and be able to reflect where they're at with financial reports, that is not a very optimistic sign. So again, I know. The typical client says, oh shit, man, I don't want QuickBooks. Man, I don't need a PFS. I just need fucking money. I just need that money that you said. But that's wrong, right? What we have to do is educate them. What we need to do is become credible to get approved for the funding. And there's the credibility from the 3 C's, and there's also the loan package. So that's the toughest thing that you and I do, is getting people from just thinking about the end result to what it takes to get there. Let's use a quick analogy. I know, like many of you, I work out most days, right? So you or I could run into someone that just says, well, I just want to lose 50 pounds or 5 pounds, whatever it may be. But that's the outcome, right? How do you get there? Most likely by changing your diet and changing your activity, your exercise. The weight loss or weight gain of muscle is the outcome. The funding is the outcome of being credible and having a loan package. So we should be helping people reframe what the problem is to get the solution that they want. All right, so from accounting software, it becomes easy to generate reports. Two important reports that we should have as part of our loan package that are historical. In other words, not future looking, but past or present, would be the balance sheet and the income statement. But so you can log into QuickBooks, click on reports, there it is, balance sheet, you pick the date that you want it, typically you'd pick today's date, and poof, it comes out. Now, as long as the data that is in QuickBooks is accurate, then we very, very simply get a good balance sheet. What can you infer from what I just said? Well, if the data is not good in QuickBooks, then we won't get good financial reports, but it's okay. QuickBooks has great support. They have certified QuickBooks advisors that you can access through your QuickBooks subscription. Lots of technical assistance to help get those books and those records clean if needed. But we certainly should be able to create a balance sheet. No, we're not going to dismiss this just because it's a new business. You'll hear it so often that you'll become nauseous. Either illiterate or new business owners will say, oh, I don't have a balance sheet, I'm a new business. Well, we still need to be able to create a balance sheet. And we'd had a recent discussion on this. Well, why is that? If I don't have any assets and I don't have any liabilities, why the hell do I need a balance sheet? Well, Sherlock, you know everything about your business, right? You're Mensa, you're Einstein-like intelligent, but if we don't get the information in the loan package, the lender doesn't know. The lender doesn't know if that new business already has $1 million of debt. And you might say, well, of course, I don't have $1 million of debt. Well, great, you know that, but it would be really nice for us to include that in the proper structure for the loan package so we can go qualify for the funding. So regardless if we have few or lots of assets, few or lots of liabilities, a business needs to have a balance sheet, and it's remarkably easy to create that if we're using some sort of financial accounting software. Again, we'll help clients with this. Now you see a little asterisk here, just like we saw it up here, and that's causing us to go back and remember, when clients are in the credit and funding program, if they have a light balance sheet, or a light net worth off their PFS, we help them with that, right? We literally transfer assets over to help them. So the balance sheet is one type of business financial report that falls under historical. The other is the income statement. Income statement shows revenue and expenses. Now, I'll give in a little bit. If I've got a brand new business or a client with a brand new business, it may very well be that the income statement is blank. No revenue yet, no expenses yet. I understand that. But we still need to produce the report, and it's easy to create the report. What I hate to see is where clients say, hey, do you have a sample or do you have a template for a balance sheet or income statement? Because you know we're on the wrong road at that point. That's a horrible mindset, because what that means is, oh, I don't really want to do this right. I don't really want to get any type of software to really manage my business's money with. I just want to wing something together. That's horrible. Is it possible? It's possible, but it's horrible. Now, in terms of timing, a balance sheet is as of a specific day. An income statement is for a given period of time, typically year to date. So from January 1st to current. Why we don't need to go back before that is because we have tax returns, which we're going to get to in a moment. So the tax return would capture our revenue and expenses from the prior calendar year. Make sense? All right, so then we get down to support documents that are, again, historical in nature, and these are bank statements. Normally, we're collecting the last 3 months of bank statements from the person and from the business, as well as the last 3 years' tax returns. Again, I want to bang my head against the desk because I'll have someone that says, well, what if I haven't been in business 3 years? Well, then obviously you don't have 3 years tax returns. Now, alternatively, a better question might be, well, I haven't filed my taxes yet. or I haven't filed taxes in 3, 5, 8 years. I've never filed taxes. You run into people like that sometimes. And that's okay. We need to collect what is there. We're not saying, oh, you have to go create tax returns that you don't have, but we do need to collect what they have so we can create a funding plan. So that is the historical side. We really need to focus on this first. So often I have clients that don't want to do this, and they just want to worry about forward projections, which we also help with. But we really need to start with the historical first. Why is that? Well, the best way to project what's going to happen in the future is what's happened in the past up to now. So what's a simple example? Let's say we have a muffler shop and we're averaging $12,000 a month of revenue the past 3 months. Well, if now we're going to do forward projections for 36 months, which is the norm, how much income are we going to project next month? Well, it probably should be somewhere around 12,000 using that example. If we project, oh, we're going to have 120,000 next month, but the last 3 months we were only at 12,000, that's a remarkable leap. So what's my point? Normally, where we've been is the starting point for where we project to be. Now, can we project growth and more profitability and all kinds of good things? Sure, there's no crystal ball when it comes to the future, so we can be aggressive, but it should start with where we're at now. Make sense? And again, as I mentioned, this should be developed after the historical financials are assembled, which we help, right? The credit and funding program, this is part of our value proposition. We help people with this. We have a great software program that puts these together. It's awesome, included for free. So with all that being said, what's the bottom line? The bottom line is that the credit and funding program, we assist participants in improving their 3 C's and creating a loan package so they can qualify for a minimum of $100,000 in funding. Our contact information is at the bottom. So it's my turn now to answer your questions. It's your turn. So if you can post any questions, comments, concerns in the Q&A, question and answer. All right, so Samantha's got the first question, and so she remembers that I said that from the moment that a client enrolls in the credit and funding program, that we implement. But you're right. So Sarah's point is we need to be cognizant that there's 2 different sales channels, and how the clients are handled varies. If they come through the affiliate channel versus the white label channel. I'm going to answer and explain both. Thank you for bringing that up. So if a client comes in through the affiliate channel, that means we've provided you an affiliate link, you have a landing page, you've driven someone there, they have signed up, then what happens? So in other words, they filled out the lead capture page on your landing page, which notifies you as an affiliate. Then they go on and they accept the terms and conditions. So now they're a client. What happens then? And that's really been part of other trainings and other discussion, but we will send them the onboarding, and then we will also invoice them for the refundable setup fee. They're expecting that. They know that. And we'll also send them a text to let them know to look for those 2 emails. So that's how the implementation occurs. And as I mentioned, on the onboarding, we immediately get started helping them, including with their personal financial statement. In contrast, if the client's coming through a white label partner, then the white label partner gets the client under agreement. The white label partner collects the refundable setup fee, which the white label partner determines what that amount is, and then we implement. I run into this frequently. Have a white label partner just late yesterday. She's a doctor, so she's obviously smart. She went and signed up several people, and she did not collect their refundable setup fee. Well, then they're not ready to be implemented, right? Because there is a refundable setup fee for the credit and funding program. And if you're a white label partner, then you collect that from the client. Otherwise, they're not ready to be implemented. If you're an affiliate or referring them in as an affiliate, then we take care of that. All right, thank you for that. Or Carlos asked, do they need to already have a business to qualify? And the answer is no. Individuals can come to us because some people don't want business loans, right? This is one, they may just be coming for auto financing, mortgages, or other types of financing. They want to improve their 3 C's for a different purpose. So no, they don't have to even be chasing money for business purposes. And even if they are chasing money for business purposes, they don't have to come to the table with a business formed yet. And then Carlos's follow-up question is, will we help them form a business if they need a business and they don't have a business? And the answer is absolutely yes. Okay, so Paulie's got a great question. And so Paulie's one of our white label partners. So Paulie's asking about, well, what happens if they enroll or they want to enroll, but they don't have the refundable setup fee? Well, they can get financing for that, right? So as long as they're credible enough, they can go out and get a loan for X amount. You might say, well, Tom, why'd you say X amount? Well, as a white label partner, you determine what the refundable setup fee is, right? And so I don't know what that dollar amount is for each of you. That's up to you to determine. So if you have, in Paulie's instance, he has one or more prospective clients that want to participate, but they don't have the money for the refundable setup fee. That's fine. Then what you can do is help them apply for a loan. And one of the best places to go is OneMain, ONEMAIN, OneMain.com, or maybe OneMain Financial. But that's a good subprime lender that will do loans, and they can apply for $1,000 or $2,000 loan, depending on what you're wanting to charge the refundable setup fee. Another option, Paulie, and for everyone else, is if you have a client that wants to participate in the credit and funding program, but they don't want to pay the refundable setup fee. Well, first, let's talk about how to overcome that objection, and then let's talk about options for it. So periodically, I bet each of you, as I know I will, do. Clients will want to do the credit and funding program, but they'll say, hey, I don't want to pay that refundable setup fee. So my question to them is, okay, what it sounds like to me, Joe or Sally, is that you're already credible. You're ready to go to funding. You do not need our help in improving your credit, your collateral, or your capacity. So let's go ahead and go to the first round of funding now. So I have them go ahead and fill out the agreement, and we'll go ahead and send them a funding app, and they can fill out that app, and we can go apply for funding. And if they have good enough credibility, then they can get $1,000 loan. So if it's an affiliate-based referral, we can help them do that. If you're a white label partner, then you would do that yourself with them. So let's say Paulie's got a client, a prospective client says, I don't want to pay out of pocket. And Paulie says, okay, great. Sign the agreement, and then we'll help you apply for financing. And then you can take them to any subprime lender you want. But OneMainFinancial.com, I believe, is a website. It's one of the best ones. They have physical offices across the country. It'll probably be high interest, probably won't be real good terms. But if they want to finance the setup fee, they can do that. Now, our goal is to improve their credibility, their credit, their collateral, and their capacity, which takes time and effort and energy. That's why we collect a refundable setup fee. And then they're going to qualify for at least $100,000. But when they first come to us, you and I haven't been part of their lives. We haven't been managing their money or their credit. And so they come to us as they are. So what's my point? There's a refundable setup fee that covers our hard cost of getting this set up. Remember, just on the collateral alone, we're transferring real assets. We're transferring $10,000 of assets to them, typically within 24 to 48 hours of them enrolling. Those are real assets. For a client to think, oh, I don't want to have to pay a refundable setup fee for you guys to help me become credible. I just want someone else to pay for that. Well, I'm not going to be the one that pays for that. If you want to be, and that's kind of my closing comment to Paulie's question. Paul, if you have a client that doesn't want or can't pay the refundable setup fee, you don't have to charge them for that. If you want to front them that, then you could go ahead and front them that and then just add it on to the back end. But we have to have that portion because we're the ones incurring the cost and effort and expense of credit improvement, collateral improvement, and capacity. We're doing all that work, and we're not going to subsidize the clients. If they just simply don't have this refundable setup fee and they can't borrow it from a bank or a relative, then of course they can become a referral partner and earn income, right? That's what normal people do. When you're broke, stone cold broke, you normally need to earn income. And certainly you and I can help them earn a great income by helping promote the credit and funding program. All right, well, we're at the bottom of the hour. Let me know if you have any questions. We're having a great wrap up to the month of March. We have today and tomorrow left. Let us know what we can do to help you. If you're a white label partner, if you've been with us for more than 30 days, remember, we should be doing at least 2 a week, 8 a month. We need to make sure that we're hitting those numbers to stay compliant. If you need assistance with leads or conversions or landing pages, let us know what we can do to help you. We got our contact us information here, and we'll talk to you soon. Thanks, everyone. Have a great day. Bye.